Time now for a full technical chart analysis from Sensei Crypto, a partner here on the show, this time on Pfizer. And now on with the video.
Thank you, Martin. Yes, let's have a look at Pfizer stock. I'm quite happy we're looking at Pfizer. It's a larger market cap stock. It's easier to analyze, and at the same time, it is definitely a safer investment than a lot of the companies we might be looking at, which are in the lower billions or even millions of market cap. So let's have a quick dive into it. Let's see where the next buy zones are. Let's see where the high risk zones are, and let's see what I think where I think this stock is going in the short, medium and long term. So if you have just tuned in, please do hit the like button and please do subscribe if you haven't yet, and please leave your comments down below or in the live chat and I'll get back to everyone. So let's have a look at it on the long term first. We'll go on to the weekly chart. So every single one of these candles will be representing a week, and you can see we've had a nice upwards growth. We had the growth between 1994 and 2000. So in about a 5-year period, it went up about 1,000%. So that was the real growth phase of Pfizer. And then it had this correction between the 2000 and 2010 where it just went down. So we had a total loss of basically from all-time highs to around that time we went down 76%, until you broke this trend and you started your uptrend again. So in that scenario, what you'd like to do is just draw a trend to know what the trend is to the upside. So you connect this low, these three lows basically at the bottom, and then those could be your buy zones for your DCA. So we've been in an uptrend ever since 2009. However, the uptrend was really brought into place in about 2010, and then again we had another touch point in 2011, and that's when you definitely knew we've got an uptrend for Pfizer again. So Pfizer went on this nice rally upwards. We've got this trend line in place, and then it went back to $61 in 2021, along with a lot of stocks with COVID. I just want to turn off. There we go. So yeah, so now we're looking to more of the shorter term, where we are right now. We have been in a downtrend ever since 2021, 2022. We are constantly putting in new lows, short-term lows, and we're finally back at these 2020 levels. This is very important for me. Every time I see 2020 levels on great stocks, that does present myself with a great buying opportunity. For example, you look at Meta, which came back to 2020 lows. It's still a great company. It was very oversold, was about $90. And now Meta's much higher, and that came back down to its 2020 lows. So I always use 2020 lows as a reference of a good buying opportunity for a good stock. So that's firstly what stood out to me. But let's forget about that and just look at the technicals. The 2020 lows you can put down as a horizontal line, and as you can see, we have this horizontal line will reflect lows from 2013, 2014, 2016, 2020, and now we're back at it again. In the past, it also was resistance in 2005, 2006, support, it was in 2002. So you can see this horizontal line holds a lot of weighting. It is a very important line. And again, it's the 2020 lows as well, which does actually mean something quite important. So for me, we are below moving averages. We are in a downtrend, but this would be the first place where it would be a great buy. It's in this first buy zone. It's come down. Let's see exactly how much it's come down in this space of time. So it's down 57% in 826 days. So just about over 2 years, it's down over 50% on a large market cap stock, which makes money, which is definitely a good stock to be in, a good sector to be in a diversified portfolio. So where are we looking for it to go? Is there any other buy zones? What are the targets for this stock? One thing I'd love to see is for this stock to get back above its moving average. So this is the moving average I like to see. If we're below the moving average, I'm not too bullish. If we get back above the moving average, then I do start getting more bullish on the stock. And this is the 20 and 21 week moving average. so you can put it on your own charts. It looks like we've tested it, and now we're looking to get back above it. So that would be getting above the $28 mark. We'll be getting back above the moving average, and I call it the bull market support band. So above it, you're in a bull market; below it, you're in a bear market. The good news is it looks like we might have a double bottom. So over here and over here, we have two lows. The lows are slightly lower on the actual chart, on the weekly chart, but on the RSI, they're higher. So that means seller exhaustion. The sellers are exhausted, and in charting terms, this is bullish divergence. So you can trade off this. So for example, one way to trade Pfizer, either for a long-term hold, you can be buying now, or if you wanted to see where's a low risk area to get in and get out, you would be looking to be entering at the $26, $27 mark. We are at $27.36, so if you're happy with getting in now, that's not too far off the entry price, especially if you're not trading it. You don't mind holding it a longer term. And now we need to start seeing where's a good area to get out, and that's the harder thing to look for. So we've got an area at $34, which was resistance, and a little bit of support. The next area would be maybe around $43 or $43, and then you've got basically the all-time highs. Can this go much lower? Yes, of course it can. If bad news comes out for the stock, what's the next buy level? Would I be putting all my eggs in one basket and be buying at $27? I would never do that. I would always have money on the side in case there's a better buying opportunity. There's only really two other buying opportunities, and that would be at $20. And you can easily put your stop loss at $25, and if you break that, then you're most likely going to $21. And the next one is at $11, and that would be if a terrible recession comes in place, something really unexpected. So you always want to have a little bit of money around to buy some of these stocks that can be obliterated if something terrible happens to the economy, and then you can be buying it at areas of complete discount. But being more realistic, and what's more likely is maybe $21. So you might want to be putting 70% of your money in now and leaving 30% in case it comes down to $21. But I do really think, thank you for the suggestion, but this is something that's going to be on my radar. I am going to be adding to my watch list because it is one of those stocks which I think is at a low risk area. Let's do the New York Stock Exchange. There we go. I've added it to my watch list. I'm going to keep an eye on it. If this video does well, I'll definitely keep you updated on it. But yes, this trade could take you up to $34, and if it goes past that, then $43. So Pfizer for me is looking like a good buy. Again, nothing I say is financial advice. Thank you for the suggestion. Let's go into the daily and have a quick look at the shorter term. Yes, this looks like it's coming back down to 26.50, but that will give us an entry on this trade, and it can go as low as 25.50. If it breaks $25, then it might start looking like it might head a bit lower, but for now it's looking great. It's looking like it's in the buy zone, and I look forward to seeing the stock go up. But I'll hand it back to you now, Martyn. Thank you.
Thank you, Sensei. Always a great job. If you'd like the links and further information on this stock and other things related, please click above my head down below in the description. And over here, you'll find more information. Until next time, as always, take care of yourselves and each other.